So in this video, I'm going to show you the trading bias for the various currency pairs right here. I want to give you the trading bias. I want to show you the key levels that you need to watch out for, okay? These key levels are very important levels which you should take note of, especially if you are trading on your own. Now, as a recap, this week was a very profitable week for us. It wasn't an easy week, but nonetheless, we almost hit 400 pips this week, okay? So this is what we do week in and week out, okay? We prepare for the week ahead over the weekends. So in this video, as always, I'll be using the free day trading guide. Okay, I'll be using the MPE trading strategy to analyze the market. Now, if you have not gotten this free day trading guide, I will leave the link to this guide in the description down below. Basically, it will take you to this page over here and you can just get it for free. Okay, no credit card is required. Just input your email and our backend will send it to you for free. Now, just a very quick refresher. M stands for market condition, P stands for price level, and E stands for entry. And what I will do shortly is I will use this MPE trading framework to analyze the currency pairs right here and give you the key levels to focus on. Now, before I move on, if you are a Telegram subscriber and you have not yet subscribed to this YouTube channel, right, really appreciate if you do that. We have many Forex trading videos on this YouTube channel. Okay, you'll learn a ton of value, right? It's all free, there's no payment required. Now, if you are a YouTube subscriber and you have not yet joined us on Telegram, okay, you definitely want to join us because last week we just made a killing and you are missing out. It's totally free again, so there's really no reason why you shouldn't join us. I will leave a link to that in the description down below. Just join us over here and you get all this value totally for free. Now let's jump straight into the Forex Factory Economic Calendar. This is the first thing that we always do week in and week out, okay? If you watch our previous market outlook videos, you will know that this is the first thing that we always do, okay? So we are planning for next week, which is the 24th of May to 28th of May. Now, as you can see, next week is looking like a very light week, okay? The only press conference that you have is the Kiwi press conference, which isn't that much of a big deal because it's not like what happened this week, which is kind of like the ECB or rather the president speaking, okay? So next week is not as heavy as this week, right? The week that we just traded. So hopefully we are going to catch some nice movement, right? Hopefully it's going to be easy to trade, and that's why you definitely want to capitalize on it and you want to be more aggressive on weeks like this. Okay, with that being said, let's go into the charts and let me just run you through these currency pairs that I've prepared for you. Now, by the way, if you like us to cover more currency pairs, for example, you have a specific currency pair that you want, the key levels on, just leave a comment down below to let me know so that we can potentially increase this watch list, okay? But for now, I want to just focus on this. If not, this is going to be a very long video. Now, this is DXY. DXY stands for Dollar Currency Index. As always, I always say that DXY is important to know because if you know the direction of dollar, then you will know the direction of euro dollar, pound dollar, Aussie dollar, and basically all the dollar pairs. Okay, so of course, if DXY is dropping, that means dollar is weakening, and of course, if DXY is rising, it's bullish, then that means that dollar is strengthening. Now, you can see that I've plotted this recent swing low right here. Okay, so first thing to note is that DXY is actually in a bearish trend. Okay, remember, we are sticking to the MPE trading framework. So market condition first. So let me show you why this is bearish. You have a swing low here, you have a swing high, you have a lower low, lower high, and lower low. Okay, in fact, last week I did talk about price trading downwards. Okay, that's why I have this arrow right here. Okay, I say that price could potentially find support at this spike low, and true enough, this level acted as support. Okay, so this demonstrates that these levels are very important, right? I don't spend time on a weekend, right? Burn my weekend just to create these videos just for fun. Okay, there's a lot of thought put into this video, right? We identify these key levels for you, so please take note of them. Right, so this is the support, right? Price now it's being supported here, and potentially price could be retracing up. Okay, so again, you might not trade directly into DXY, but you could potentially see dollar strengthening. So if dollar is strengthening, then perhaps you want to be shorting euro dollar. Okay, so let's go into euro dollar. Now, euro dollar, the market condition is bullish. Okay, let me just show you. This is the high, this is the low, this is the higher high, higher low, higher high. Okay, so market condition wise is definitely bullish. Now the question is, where do we buy, right? Because after M we have P for price level. We want to look for a good price level to buy. So if we go back to the charts right here, you can see that this is a recent high and this is acting as support. If you were to scroll back, you can see that this is high, this is high, high, high. So this is a very strong level. Okay, but one thing to note is that the resistance is very close. Okay, so if you had buy, let's say on this engulfing pattern right here, then there's really no space. Okay, because you enter something like this, and if you put your stop loss and you know your take profit, let me just redo this. Okay, you do it something like this, then basically there's no meat towards this level. Okay, there's not much space. So for this reason, we're in a very tight range, so I'll be very reluctant to buy. Okay, because again, it's very close to resistance, unless we get a nice engulfing pattern, nice pin bar. Okay, maybe a small pin bar, and maybe if you can go in something like this, okay, something with a really tight stop loss, maybe something like that, and you target the recent high, something like this, then it might make sense. Okay, but if you get an engulfing pattern that happens, you know, by the time price closes, it's somewhere around here, then please do not chase this trade because it's very close to here. Okay, the other way that you could potentially trade it is to just wait for price to come up here again, breakout, retest, look for a candlestick pattern, and just take the long up. Okay, remember the bias is bullish, so we do not sell in a bullish bias. Okay, you just follow this day trading guide which I've prepared for you, right? Market condition is bullish, so if the market is in an uptrend, you want to buy, right? We have the price levels, I've plotted it for you, and the last thing that we need is we need the entry. Okay, it could be a hammer, it could be a bullish engulfing pattern. Okay, as of this time right now, okay, today is Sunday, we do not see anything, so just be patient, take note of these levels. Now the last thing to note is that there is an ascending trend line right here as well, so please do not think of going short, right? Let's say if price break here, because potentially it could just, you know, move down a bit and then it starts going up like that, and then you get stop out. Okay, so just be very careful about this trend line and be careful because the trend is bullish. You do not want to be selling. Now let's go into pound dollar. Okay, pound dollar is very similar to euro dollar. So I have this level right here. If you look to the left, this is actually the resistance. And if you draw this trend line connecting this line here and this line, okay, or rather this low, candle low, and this candle low here, you will get something like this, and price is very close to this. Now this is very similar to the euro dollar trade because what happens is that resistance is very close. You have this spike high right here. Okay, so again, I don't recommend trading in the zone right here. Okay, what I recommend is for price to break up, look for a retracement down. Okay, try to get in with a nice stop loss. Okay, tight stop loss. Please do not chase the market, and if it's possible, try to enter something like this. Okay, let me just show you, and just make sure that your risk to reward still makes sense. Okay, you don't want to enter, you know, if the engulfing pattern happens somewhere here and it's too high up, you don't want to be chasing the market like that. Okay, so just be very careful. As of today, there's no setup currently, but the bias is definitely bullish because you have a high here, low, higher high, high low, higher high, high low, so on and so forth. Okay, so bullish bias, key levels already provided for you. Now let's go into a dollar franc, which is actually the opposite of euro dollar. Now market bias, or rather the market condition, it's kind of bearish. Okay, it's very obvious because you have a high, low, high, lower high, lower low, lower high, lower low, lower high, and so on and so forth. So it's a very clear bearish bias. Now on Friday, price did reject this swing low right here. Okay, so this could be a potential setup, right? And the next level that we have is this level right here. Okay, you can see that this was a resistance, resistance, resistance. Okay, so a possible setup, it's not the best setup, but it could be something like this. Okay, it could be something like that. Let me see if the risk to reward actually makes sense. Okay, so in this case, the risk to reward actually is kind of decent. Okay, it's not the best, right? Normally, I strive to aim for at least 1 is to 1.5. So in this case, we are getting 1 is to 1.7. Okay, so this is not the best setup because this is a doji candle, but right here on this bar here, we have an engulfing pattern right here, okay, and there's an engulfing pattern right here as well. So this could be a potential setup. Right on Monday, you can go ahead to take this trade. Okay, just be careful about your stop loss, put it above, okay, and just target right here. Okay, so this dollar franc is a trade that I recommend, okay, because it fulfills all three steps right here. Okay, we have the market condition, it's bearish. Okay, we have the price level, which is the recent swing low, and lastly we have an entry trigger, which is kind of like a bearish engulfing, or as well as a doji right here. Okay, so please pay attention to this currency pair. Look for this trade next week. Now this is Aussie dollar. Okay, Aussie dollar is a currency pair that I personally don't recommend trading it, okay, because it's a total mess. So I won't talk so much about the trading bias because it could be bullish or it could be bearish depending on how you see it. Okay, so one thing to note is that there is an head and shoulder pattern that is forming right here. This is a left shoulder, this is the head, and this is the right shoulder. Okay, and at the same time you have an inverted head and shoulder, which is left shoulder here, right shoulder, head here, and right shoulder right here. Okay, so it's a complete mess. So what I've done is I've plotted the key levels for you to focus on. Okay, so we have this level here. If you were to look back, it's actually a very strong level. Okay, over here, and this is also the right shoulder. This is kind of like the neckline of this head and shoulder. So this is the level. This level is actually this spike high over here, and of course this level is this recent swing high, and on the downside we have this support right here, which is actually kind of like the recent swing low. Okay, this is the recent swing low. We just plotted it here rather than the extreme because there is a support here as well. Okay, so I don't recommend trading this, so I will not give you a trading bias, but I will just give you the key levels. Now let's talk about Kiwi dollar. Kiwi dollar is also same to Aussie dollar. I don't recommend trading it. Now last week, or I think 2 weeks ago, I did talk about this level right here. I said you have to be careful. Okay, now one thing to note about this Kiwi dollar is that again, it's like Aussie dollar. There's no clear direction. It could be bullish, it could be bearish. I don't really know. Okay, I don't recommend trading in this zone right here because this is a range play. Okay, if you are new to trading, please try to stick to the obvious setups like the dollar franc trade over here. Okay, please try to avoid currency pairs like this because it's very tricky. So what happens is that some people they will short on this breakout of this support, and they don't realize that there's actually another level right here. Okay, so I've plotted this as an important level as well. So what some people might do is when the market breaks here, they might chase the market and they start selling, and what price does does something like this, and then it goes back into the trading range and starts ranging again, so they lose money. So I don't recommend trading this, but if you really want to trade this, then what I recommend is that you wait for price to break out of this low as well. Okay, do a clean break of this level, retrace into this entire zone of resistance and look for a candlestick pattern. Okay, if not, otherwise it will be to wait for price to break above this resistance right here, retrace down, and then go for the long on top. Okay, again, please do not trade this if you are a beginner. Now let's move on to dollar CAD. Dollar CAD is also another trade which is easy to trade, okay, because the trend is clearly down. Okay, if you tell me that this is a bullish trend, then I think you really need to study the fundamentals because it's clearly a downtrend. No matter how you look at it, it's a bearish trend because we have series of lower lows, okay, low, low, and lower highs all the way. Okay, so this is bearish trend. You want to look to sell. Now, one thing to note is that on Friday, okay, price did this, okay, price closed like that. Okay, so this level right here is very important. Let me show you. If you scroll back, this level here, let me just change the color so it's clearer for you. Now, this red line here is actually the recent, not really recent, but kind of a swing low right here. Okay, and this level, the next level is the swing low right here. Now, the tricky part about this is that on Friday, okay, price barely closed below, or rather on this level. So as of today, we do not know if this level is broken or not, okay? So it's kind of like a gamble because if you were to take a trade, right, you're gambling that this level is broken and it'll come straight down, okay? But if the market doesn't see this level as broken and it just retrace up, then you get stopped up with a loss, okay? So this is a bit more high risk. Personally, I think it's still worth a bet. Okay, I see this more as a bet because the risk to reward still makes sense. So if you were to short, something like that, and you put your take profit like that, okay, the risk to reward still justify taking this trade, okay, because you risk $1, you make $2.76. It's still a good trade, okay? So this is what I recommend. If you want to take the trade, just make sure that the risk to reward makes sense and you control your risk, okay? It's not very clear at this moment. Alternatively, you can wait for Monday's candle to close below this level. Okay, make sure that price closes below this level first, maybe close somewhere here, and then you take the trade, and that will give you more confirmation and increase your probability of making money for this currency pair, okay? Now let's go to dollar yen. Dollar yen, it's in a bullish trend right now. Okay, market condition is bullish. So we have a high here, we have a low, we have a higher high and a higher low, okay? More importantly, if you were to just draw the trend line, something like this, right, just fix it, you will see that price actually supported at this trend line, okay? And there's confluence with this market structure level, okay? If you can't see it, just switch to the line chart, okay? This is a low, this is a low, here as well, here as well, okay? So this is a very strong level. Now, the problem is that there is an engulfing pattern here, and this candle doesn't look that convincing, okay? So it's possible for you to take a trade, something like this, okay, something like this, and just target here, okay? Again, the risk to reward is not bad, and the market condition is bullish, so you can take a trade something like this. But I don't really like this candlestick, okay? Personally, I will wait for more confirmation here. I want to see a nicer candlestick pattern, okay? This is not a perfect or not a very nice hammer pattern, and it's not an engulfing pattern as well. So personally, I rather wait a bit. But if your risk profile is a bit higher and you want to take this trade, then it's possible for you to do something like this, okay? Now, let's talk about gold. Gold is another trade that I recommend because it's very clear. Okay, in fact, for the past couple of, I think, weeks or even months, I've been saying that gold is bullish because this was the double bottom right here. First bottom, second bottom, this was the neckline. It was broken and retested right here. Okay, market condition is definitely bullish. You have a high, you have a low, higher high, higher low, high high, high low, high high. Okay, so right here, this is a very key level, 1862. Okay, if you just scroll back, you can see that there's a spike low here, very strong level, and after that price rebounded strongly. Here price struggled, here price struggled, right here a little, and when it retested somewhere around here. Okay, so this is a very good level, and more importantly, I see that there's a lot of space. Okay, space means that there's a lot of distance that price can travel before it encounters the next resistance level. Okay, so right here we actually have kind of like a bit of like an engulfing pattern right here. This is like doji and this is like engulfing pattern, and because there's a lot of space to here, what is possible is that you could potentially trade a setup something like this. Okay, something like this, where you still get a very good risk to reward. Otherwise, you can choose to tighten your stop loss and do something like this as well. Okay, just put your stop loss below the engulfing bar here, and then your risk to reward will go up by quite a fair bit. Okay, this is another way to trade it, but please only stick to the bullish bias for gold. Okay, please do not be a hero and start selling gold, because really it's just in a very clear uptrend. Euro pound. Okay, Euro pound is a bit more tricky. I don't recommend trading Euro pound. Okay, last few weeks or the past couple of months, I've been talking about this left shoulder here, right shoulder, and the potential right shoulder right here or right here. Okay, now price seems like it wants to go down. Okay, and price has been failing to close above this level here. Okay, in my market outlook video last week, I did talk about this level right here. I said that I want to see price close above this, and price barely close above this. Okay, in fact, if I were to zoom in, you can see that price closed barely above this candle high and not above this candle high as well. So this entire movement here seems like a very weak retracement. So I'm more towards the bearish side right now. Okay, except that there is this support right here. Okay, so what I would like to see is I would like to see price break below. Okay, do a very clean break, a very strong break. okay, because again we have this level here as well. Okay, so the lower down it can break, the better. Then wait for price to retrace into this entire zone, and then we take a short down all the way to here. Okay, should be a trade that has quite good risk to reward ratio if you're able to get it, you know, somewhere here. Okay, because there's quite a lot of space down towards the recent swing low. Okay, just be patient with this. It's not very clear at this moment. We need to see this breakout of this low here, then we can potentially look for a trade setup. Okay, the last currency pair, pound yen. Okay, pound yen market condition is bullish. Okay, if you were to zoom out, okay, you can see that the market structure is bullish. You have a high, low, higher high, higher low, higher high, higher low. Okay, so it's definitely bullish. Now, the recent swing high right here, if you just plot a line, you can see that price is just consolidating above. Now, more importantly, if you were to go into the H4 chart, okay, you can see that there is a form of like an ascending triangle, okay, something like this. Okay, there's an ascending trend line here as well, so definitely you want to look to buy. Okay, the only problem right now is that you don't have a very nice candlestick pattern. So what might happen is that price might, you know, come down a bit lower to test, give you a nice candlestick pattern on this price level, and then we take the long up. Okay, so just be very patient. Now, our target is here. This is the good target, because if you were to scroll back, let me just adjust it a bit. It's actually somewhere here. Okay, this is the recent swing high, so it's not that difficult to spot. Just wait for price to retrace here, and then I will take the trade above here. Okay, so that's it for this market outlook video. All right, if you want other currency pairs, right, you want the key levels, right, just please let me know in the comments down below. Okay, again, please join us on Telegram channel, because we send out our trade signals, right? Okay, if you do not have the time or experience to monitor the markets, then you definitely want to be a part of our free Telegram group, where we send to you our signals, right? These are intraday signals. We show you where to buy, where to place your stop loss, when to exit. Okay, all these are provided in our Telegram channel. I will leave a link to that in the description down below, so make sure you join us. Okay, if not, thanks for watching, and I hope you trade safe, right? Please prepare properly. Hopefully we have a good trading week ahead.